You've reached the pivotal point in your business where you now need to differentiate your personal finances from that of your company's cash flow. In order to do this, you will need to select a company bank account that offers value, certainty, and the right services for your business as it grows. I think that the bank that you choose and entrust with your business funds should be chosen like you would select a business partner. This is because a bank can unlock a number of different things like access to overdrafts when cash flow is tight, attractive savings rates through investment products, loans when you're expanding or you're making capital investments, rental financing when you need premises, or insurance products to protect your business. In this way, the bank you choose can become an integral part of your business growth. I'm not saying you have to choose one bank and use them for every additional financial service. You can shop around, but a bank that offers turnkey solutions across financing, savings, insurance, and banking can be beneficial. This is why it is important to not only look at fees that are affordable, but to also consider where your business is currently and what you envision over the next 2 to 5 years. Your chosen bank should be able to assist with what you may need access to, like financing or foreign exchange, in order to support your vision. I believe that as much as your bank works to charge you fees, you need to ensure that you're making your bank work for you in terms of what they offer and how you're utilizing their product. Who you choose to bank with can impact your access to funding. This is because banks look at your business account history when you apply for a business loan or overdraft. A well-managed business account with consistent cash flow improves your chances of being approved for financing. Some banks even offer preferential lending rates or faster approvals to existing business account holders. So it's not a decision you should take lightly. Money is a very personal thing, and bad service levels can be very frustrating. Furthermore, as we've seen with African Bank in 2014, banks can go bust and the cash you deposit is not guaranteed, although it is not likely because the big 5 banks in South Africa are well capitalized and regulated. The Corporation for Deposit Insurance, regulated under the South African Reserve Bank, provides deposit insurance protection of up to 100,000 Rand per depositor per bank. However, for some businesses, this limit is relatively low. If you hold about 500,000 Rand in your business account, only 100,000 Rand of that would be protected. I'm Victoria. I have my master's in finance. I've worked in corporate as an equity analyst, and I run my own business as a website designer and business consultant. So I understand the importance of choosing a bank that works for you. I'd like to stress that I'm not a financial advisor. The views I share in this video are simply my own as someone who runs my own business and needs access to a banking system where I can safely store my income and manage my finances. In this video, I will break down different business structures, what you'll need in terms of FICA to open a business account, specifically looking at a sole proprietor and private company structure. I'll list the specific financial products you can consider for your business, and finally I'll compare the business bank accounts on offer through FNB, Absa, Nedbank, Standard Bank, and Capitec. We'll dive into the features, costs, and unique selling points of each of them. This information is purely to showcase what each bank offers. I don't provide advice or a financial opinion. It simply is to state the fact. You also need to consider that the costs associated with a business bank account change from year to year. So if you need a business bank account, it is best that you do your own research and you come to your own decisions when deciding on where you bank. Before we dive into the details, I'd really appreciate if you can subscribe to my channel. If you enjoy this type of content, it helps me to keep creating videos and grow the community. I've also created a comprehensive guide that covers everything in this video and a bit more. The first thing we'll take a look at is the different legal structures that you can have for your business. Why is this important? Well, because your legal structure will determine what bank account type you will need or get access to. There are several different types of businesses that can operate in South Africa. These include a sole proprietorship. One person owns and runs the business. There's no separate legal entity, so the owner owner is essentially liable for all the debts. There's also a partnership structure where 2 or more people share ownership, profits, and liabilities. There's also no separate legal personality. This would be governed by a partnership agreement. The next structure is a private company or PTY Limited. This is the most popular structure for small to medium sized businesses. It is a separate legal entity from its owners, so it limits shareholder liability to their investment. This requires registration with the Companies and Intellectual Property Commission, or the CIPC, and it needs to have at least 1 director specified. A personal liability company is common among professionals like attorneys and accountants. Directors are jointly and severally liable for debts incurred during their tenure. This is the opposite of the liability protection in PTY Limited. A non-profit company operates for a public benefit purpose rather than for profit, and it's common for NGOs, charities, and community organizations. A co-op is a member-owned and controlled entity. Members share benefits in proportion to their participation. This is common in agriculture, retail, and housing sectors. A franchise, while it's not a separate legal structure, franchisees typically operate as a PTY Limited or a sole prop under a license agreement with a franchisor. This is common in SA retail and food sectors. For this video, I will be focused on sole proprietorship and private company legal structures and what is on offer in terms of bank accounts. Now that we've covered the legal structures of an entity, let's take a look at FICA. And I know FICA is not very exciting, but it's extremely important for getting a business bank set up. So FICA stands for the Financial Intelligence Center Act, and it is legislated in South Africa to combat money laundering and tax evasion. Accountable institutions like banks have a legal obligation to verify the identity of their clients, understand the nature of the business relationship, and monitor transactions for suspicious activity. Banks simply cannot take your money and open an account. They are legally required to know who you are, where your money comes from, and what you intend to do with it. As a sole proprietor, you will need the following documents in terms of FICA to open a bank account, and that includes a valid South African ID, a proof of personal address not older than 3 months in the form of a utility bill or bank statement, and finally the name of your business. You do not need to be registered with the CIPC. If you're opening an account as a private company or PTY Limited, you need the following FICA documents: a company registration certificate which you receive from the CIPC on company registration, ID copies for all directors, a company proof of address, a SARS tax reference number, a company resolution authorizing the account opening if there are multiple directors. Now that we've got the legal stuff out the way, let's dive into what to consider when choosing a business bank account. The first thing you would want to have a look at and compare is fee structures. I don't know why, but historically banks have made it really hard to understand fees and what's involved in terms of fees. This is changing and becoming more transparent as you can now download pricing on most bank websites, but it's still important to read the fine print. I've included the link to the pricing structures for each bank I've covered in this video in the description below. The 2 main fees that are associated with any bank account are the monthly account fee and the transaction fees. Monthly account fees are a fixed fee that are charged regardless of your transaction volume. Business bank accounts are generally more expensive than personal accounts, so it's important to take a look at what the monthly fees are. Some banks like Nedbank also charge a yearly service fee. Transaction fees, this is what you pay per payment, transfer, or EFT. This is generally a fixed amount per transaction. It's important to not only look at the monthly fee on its own, but to also check the transaction fees. A bank with a low monthly fee but high per transaction cost could end up being more pricey depending on your transaction volumes. Other fees like cash deposit fee, cash withdrawal fee, inter-account transfer fee, third-party payment fee, statement fees, card fees are also important to consider, but may be specific to your industry. If you're a cash-heavy business that needs to deposit cash daily or weekly, then cash deposit fees will be important for you. However, if you're an online business business that doesn't carry too much physical cash, then cash deposit fees are less important. Now that we've covered fees, here are several elements to consider when choosing a bank. Online and mobile banking. Your bank needs to have a reliable and easy to use online platform specifically focused on mobile that enables you to make payments and manage beneficiaries safely. Integration with accounting and payroll software. Most big banks offer integration with accounting platforms like Xero, Sage, and QuickBooks. Payment capabilities. This can include options like batch payments where you can pay multiple beneficiaries at once, SWIFT or international payments if you have foreign suppliers or you receive international payments. It's good to do an assessment of what the payment optionalities are for each bank. Access to credit and financing. Assess whether a bank offers overdraft facilities. Check what business loan products are available. Some banks even offer asset and vehicle finance options. This gives you optionality when you want to grow your business and you need access to cash. Customer support. When you need assistance with a particular matter or you have an inquiry, it's always good to have a good connection to your bank's customer support team. Confirm the bank's support hours and see how they handle inquiries. Is it through email or phone? And some banks even give you access to a private banking professional. So check customer reviews and listen to honest experiences. Additional products and value-added services. Most banks offer more than just transactional accounts, and these extras can add real value for your business. This includes business insurance product, investment and savings offerings, fleet management or fuel cards, travel and foreign exchange services, business development resources, mentorship or networking, preferential rates on other products for being an account holder, rewards or cashback program. In terms of bank financing, here is a list of products to consider. Your bank should be able to assist with these products and assess your company financial history to determine credit rates and funding availability. Credit cards. Credit card rates are usually the most expensive form of financing at around 20 to 22% per annum. I would consider these more of a transactional tool rather than a funding option given how high credit rates are. Overdraft. Overdraft rates are generally more attractive depending on the business and the bank. Overdrafts offer a more flexible way to manage working capital fluctuations than credit cards, but they also shouldn't be used as a permanent source of financing. Secured and unsecured loans. Unsecured loans are typically charged at prime plus 5 to 10% and are applicable if you run a business without assets to pledge as collateral. Secured loans offer more attractive rates around prime plus 1 to 4% depending on the value of the asset that you are securing the loan against, which could be something like property or equipment. Asset and vehicle financing. Because the asset itself serves as collateral and the bank can repossess this if you default on payments, pricing is generally better than unsecured lending. Invoice discounting. Invoice discounting is a form of short-term finance where a bank gives you cash against invoices you have issued to a customer but you haven't yet been paid for. This is said to cover the cash flow gap from invoice to payment. Trade finance. Trade finance includes letters of credit, import and export financing, foreign exchange services, and bank guarantees. Major banks will have dedicated trade finance divisions that assist with cross-border activities like importing and exporting and foreign exchange. Government funding. There are a number of government-led initiatives that give business owners access to loans at concessional rates with more flexible collateral requirements than banks. Crowdfunding. There are different facets of crowdfunding. Peer-to-peer lending contract connects businesses needing loans with individual lenders. Standard Bank offers access to alternative funding through the Thunder Fund and Give to Grow crowdfunding project. On the flip side to funding is saving. Higher interest rates within South Africa mean we get get access to competitive savings products. Fixed deposits or notice deposits. Fixed deposits and notice deposits offer the highest deposit rates because you're committing the funds for a defined period. The trade-off to this is total illiquidity for the term you commit to. This is ideal for cash that you are certain you will not need over a specified period. Nedbank offers a range of deposit products where the electronic fixed deposit fund offers between 6.3% to 9.2% interest depending on your term and amount invested. Call accounts offer same-day access to cash at interest rates that may be higher than your business current account. The advantage to this is liquidity, as you can transfer funds between accounts immediately. How you structure your cash management is important. So we've covered legal structures, FICA requirements, fee structures, and specific elements to consider when choosing a banking partner. Now let's compare the current bank account offerings of Capitec, Nedbank, FNB, Absa, and Standard Bank. The zero account can be added to an existing personal account with FNB. Similarly, Capitec has the entrepreneur account, Nedbank has the startup bundle account, whilst Absa has the business evolve core account, and Standard Bank has the My Mobiz pay as you transact account. Nedbank is the only comparable account that specifies the monthly account is nil for the first 2 years. From then, it is 80 Rand per month. Standard Bank charges 15 Rand per month, whilst Absa, FNB, and Capitec have no monthly fees. Through Nedbank and Standard Bank, there are additional offerings like access to the Simply Biz platform with Nedbank and access to a market-linked savings account and UCount rewards program with Standard Bank. Card purchases attract no charge, which is great. FNB offers the most attractive third-party payment fees, whilst Capitec offers the best rate for external debit orders. Interestingly, it's much more cost-effective to withdraw cash through a retailer like Checkers than it is at an ATM. Absa offers the best withdrawal rates at close to 1 Rand per 100 Rand, whilst Capitec is the most expensive. Nedbank offers free transactions, free cash deposits, and withdrawals limited to certain thresholds for the first 2 years. I've included the fees for Nedbank's startup bundle at rates after the 2-year grace period. You can see that these costs are fairly high relative to the other 4 banks. All of these accounts are aimed at sole proprietors or small businesses just starting out. So let's move on to current accounts aimed at private companies. Across Nedbank, Absa, Standard Bank, and FNB, you can elect to have a bundled package where the bank charges you a single monthly fee that covers a defined amount of transactions and services rather than charging you separately for each individual transaction. This might look like a set number of free third-party payments, cash deposits up to a certain value. The main disadvantage of bundled pricing is that you may end up paying for facilities you don't really use. For low volume businesses, the monthly bundle fee can exceed what you pay on individual transactions. Do the calculations, analyze how many transactions you would be averaging every month, and compare it to the bundle offerings available. For instance, Standard Bank through the Biz Launch account, which costs 315 Rand per month, allows free cash deposits of up to 50,000 Rand and 35 free digital transactions across card purchases and electronic account payments. This is beneficial if you have a business that carries cash. However, 35 transactions across digital transactions seems pretty low. In this instance, it may be more beneficial to find a higher bundle plan, which goes up to 700 Rand per month and 80 free transactions, or you could opt for the pay as you transact account for more flexibility. Under the pay as you transact framework, every transaction is priced and billed individually. This is what we will be comparing in this video because it's quite tricky to compare bundle packages on a like-for-like basis where each bank offers different solutions conditions and different thresholds for deposits, withdrawals, and digital transactions. You will need to do your own research when it comes to the best bundle option and bank for your business. So let's take a look at the offerings for a private company or private company bank accounts across the 5 banks in South Africa. Capitec is the only bank that doesn't have bundle pricing. Instead, it offers very competitive, simple pricing through the Capitec business account. The monthly fee rivals that of FNB's Gold business account, which is 49 Rand per month versus Capitec's monthly fee of 50 Rand per month. FNB offers competitive rates across its FNB Gold business account, where you get access to an eBucks rewards program for business, free unlimited data for WhatsApp messaging, a 24/7 business desk, the Fundaba business education platform, fleet management services, comprehensive trade services when it comes to importing and exporting, and solar and energy finance. Capitec remains the cheapest when it comes to local card purchases, third-party payment fees, and external debit order fees, but is the highest for cash withdrawals at an ATM. Through Capitec's business account, you get access to simple fee structures, franchise services, forex services, payment services, card machines at competitive rate, rental finance, vehicle and asset finance, and insurance through Capitec's partnership with Outsurance. Absa's Evolve Pay as you transact account has the highest monthly fee at 115 Rand per month, and the immediate payment fee of 40 Rand is quite steep. Absa's Evolve Pay as you transact account offering includes access to business loans, vehicle and asset finance, property and agricultural finance, and trade and working capital. According to their website, they also offer various levels of SME development funding through certain initiatives. They also offer international services like forward exchange contract, foreign currency, and working capital finance. They also offer a point of sale device. Standard Bank is the second most expensive monthly fee at 105 Rand per month, with a high external debit order fee of 20 Rand per month and third-party payment fee of 9 Rand 30 cents. The Standard Bank current account offers access to the UCount rewards program, which is 365 Rand per year, and this gives you various rewards relating to fuel and retailers. It has a comprehensive offering of insurance, trade finance, business loans, financing and insurance, cross-border support, HR and payroll services. Through these Simply Blue card machines, you can download the merchant app to your phone. You can track sales and inventory and build a simple online store that allows you to accept payments. Nedbank sits in the middle with a monthly fee of 80 Rand. However, they do charge an annual service fee of 200 bucks. Card purchase fees are competitive at 3.5 Rand per transaction. The Nedbank Pay as you transact account offers access to a dedicated banker, the Simply Biz Resource Pro platform, card machine, lending solutions, investment products, insurance, invoice discounting, and a merchant cash advance option. If you would like to download this table, you can access it in the comprehensive ebook I created. The link is in the description below. Capitec, Nedbank, Absa, FNB, and Standard Bank all offer various levels of value-added services, including business overdraft facilities, credit cards, trade finance and forex services, business insurance, savings products, vehicle and asset finance, point-of-sale devices or card machines, and business loans. So there you have a brief comparison of business accounts offered by the big 5 banks in South Africa. I hope it has given you some insight into what is on offer and how you can structure your business finances to work for you from the start. I'd like to reiterate that these fees may change. I might misinterpret certain options and fee structures, which makes it difficult to compare accounts. So please go do your own research and fact checking when it comes to choosing a business bank account. It's a really important decision that should be chosen with all the facts in mind. Remember to download the guide I've created. It includes everything we've covered today and more. If you found this video helpful, please give it a thumbs up. It really helps other business owners to find this content. And if you have any questions or you'd like me to cover a topic in more detail, please drop a comment below. I'm not a qualified accountant, tax professional, or financial advisor. I'm a small business owner sharing my personal experience and research to help fellow entrepreneurs understand their options. This video is for educational purposes only and should not be considered professional financial advice. The information provided is accurate to the best of my knowledge at the time of filming, but pricing, features, and regulations can change. Every business has a unique circumstance, so before making a decision about business accounts or financial management, I urge you to consult with a professional who understands your specific business situation and the regulatory requirements in South Africa. I have no paid sponsorship or affiliate relationship with FNB, Capitec, Nedbank, Absa, or Standard Bank. Always do your own research and due diligence before making any financial decisions for your business. I hope you've enjoyed this, and I'll see you at the next video.